All right, thanks for staying with us. It is time for Market Makers. And now, over the next couple of editions of Market Makers, we would be taking the clock back and then we'll take the clock forward. Clock back to understand last 10 years of the Modi government. Now, I would urge our viewers to take a pause, deep breath, and imagine what India was 10 years ago. 10 years ago, long queues at toll naka. Roads were there, but there was no speed on the roads. We had ACs, but we had no electricity. Literally, the word 24/7 power meant 7 दिन में 24 घंटा बिजली. Now things have changed. New airports, the excitement in the financial markets, from fragile 5 to top 5. So world has not taken a giant leap in terms of growth. Last 10 years have been marred with balance sheet expansion at global level, COVID, and huge amount of money printing. But when it comes to India, touch wood, it has just been a perfect wicket. And sector by sector now, inertia, energy, momentum, entrepreneurship is getting created. But from a stock market standpoint, the fact that we are at an all-time high, have we reached the climax of wealth creation, or next 10 years will be equally exciting like last 10 years? Let's take the conversation forward. And it's a bit of a deja vu moment. I remember we had a chat when Prime Minister Modi got elected. You were in the same studio and we said, okay, good things have come. Achhe din aane wale hain. But no one thought that achhe din would be 3 times in stock market in 10 years. Multiple stocks which have become multi-baggers. In general, the whole India appeal has changed.
Totally, Nikunj. It's actually a bit unbelievable because I have been for the last maybe 20 years traveling the world and going to several of these big places which are essentially capitals of capital, so to say. Meeting all kinds of investors, particularly institutional investors. And the kind of positivity which is there for India, I think is unprecedented. I have never seen this kind of positivity, especially after COVID. So I think that's a huge, huge change. When I used to go 20 years ago, 15 years ago, 10 years ago, they used to all talk about China, China, and China. That no longer is now the conversation. The conversation now is becoming India, India, India. And what India can achieve now in the next 5, 10, 15 years. And that's essentially the echo, that essentially is the focus of the world. And therefore, probably think that maybe the next few years or the times ahead could be even a lot more challenging than what even the last 10 years have been. Could be a lot more interesting, than what the last 10 years have been.
They say good news and good price rarely comes together. Right now the news is great. It's never been this good. So you may feel good and you will feel great. But do you think stock market investors now need to take a deep breath and say, okay, last 10 years have been great for wealth creation. Next 10 years may not be that great for wealth creation because a lot of news is in the price.
So Nikunj, I don't think mega trends finish off in a few years. Mega trends can last way longer. I probably think India will not go the China way. India will go probably the US way. And US has been essentially an ocean of wealth creation now for 50 years or 100 years. It's not been a journey. China's journey of wealth creation was only 10 years. Somebody was telling me that last 20 years or 25 years, 20 years, China has been flat. The public markets have not delivered returns in China. I think versus that, it is US which has essentially created phenomenal wealth. Even now, maybe probably even over the last 1 year, US markets have probably been better performing markets. So I probably don't think we should get into that wealth preservation mode. Obviously, wealth preservation always remains. You always try and protect your downside first. You always say what can go wrong rather than what can be possible on the way up. So that always remains. That mantra of trying to protect capital, trying to preserve capital, trying to avoid mistakes, trying to avoid losses, that should always be your first stepping stone. But I don't think we are done yet. I probably think the journey has only started. And the best way to look at this is what has the United States achieved over a very long period of time. So obviously along the way we will have to probably go a bit like the China way, we will have to go a bit like the South Korea way, we'll have to go a bit like the Japan way in terms of creating our manufacturing capabilities and that helping that shift from farms to factories. That obviously has to be there. But eventually I think given the head start that we have in the world of technology, in the world of digitalization, the fact that we are a democracy, my view is that the template should be what United States has done over 50 or 100 years rather than what China has done over the last 10 or 20 years.
Okay. Now, every patch or every period marks a particular set of circumstances. Macro, interest rates, flows, sectors, leadership. What I'm trying to perhaps derive here is that the first period of the Modi government, which is Modi 1.0, 2014 to 2019, was about repair. Banks had to be recapitalized. Corporate governance had to be improved. Policy paralysis had to be reworked. So that was the repair phase. Then came the growth phase. Tax came down, capital expenditure went up, infrastructure started booming. What do you think will be the main headline from a market standpoint for Modi 3.0?
I think I probably think the Prime Minister and the party's manifesto have already pretty much like kind of indicated what we should expect. And the big headline obviously is going to be, maybe it's something going to be like reforms 2047 or goal 2047. I think clearly it's going to be that, and maybe what was not or could not be done in the last 10 years will probably be done maybe in the next maybe 1 quarter or 10 months of assuming power, maybe during the course of the next 6 months after assuming power. I think that going to be, and probably areas to do with labor, areas to do with agriculture. I think these would probably become the big focus.
Can you identify direct beneficiaries and the big beneficiaries for us?
So I think overall what I see, Nikunj, is the biggest beneficiary is going to be the manufacturing sector. Whichever way, even if you look at labor reforms or even if you talk about agriculture and the fact that it can basically create a huge new opportunity in say food processing and making the value chain way more attractive and capturing a lot of that value chain more efficiently. I think all of that finally eventually is going to make us essentially manufacturing powerhouse. And that should be the strategy, and that's because no matter what you do, if you want to essentially raise incomes, you need to create more jobs, and the only place where jobs can be created in a more significant manner is going to be manufacturing. It is going to be your factories which will create. And for that, Nikunj, if you just look at it, the first 5 years of the last 10 years, the big reforms were RERA, GST, and lowering corporate tax rate. That was the big thing, okay? The benefits of which you saw only in the next 5 years.
Even Jan Dhan,
yes.
Digital India,
Jan Dhan,
Jan Trinity.
Yes, all of those benefits.
The list is long actually.
So it's a very long list, and you could call that as financial inclusion, achieving like 500 million people now have a bank account. These are big things. The benefits of which you saw only between 2019 and 2024 and more so post-COVID. The second term, or the 2019 to 2014, there was a huge focus on manufacturing, which is this whole focus on infrastructure, this whole focus on energy security. These have been the two big kind of focus areas, the whole PLIs thing. All of these have been there. The whole focus on semiconductors, okay? They all look right now very early, very nascent. But I think between now and 2029, the next 5 years, you will see the outcome of what has happened in the last 5 years there.
So if you have to prepare a portfolio, assuming that these are the headlines, and I'm just going to break it for our viewers, and markets, you have to look at which way the puck is moving. Markets always vote for one thing, rate of change. HUL is a great company, but if HUL is not growing, it will no longer be a great company. So post-COVID, you said government is going to be increasing Atmanirbharta. Defense started doing well, manufacturing started doing well, PLI schemes were launched, auto started doing well, pharma started doing well. Now if you feel that agri, energy transition, migration of global patents, chips, everything will be made here, how would you prepare your portfolio for Modi 3.0?
So Nikunj, the way I see it is the next 5 years, next 10 years. I see 3 very important pockets.
Okay.
And you could break it up for the sake of simplicity. First essentially is our consumer part of the economy. The second essentially is the digital part of the economy. And for sake of ease, I'll call it as the consumer economy, the digital economy, and the third I would call it as the physical economy. These
Digital?
three. Consumer, digital, and the physical economy.
Okay. Everything is related, right?
Yes and no.
Okay.
Yes and no. Obviously, things like technology, digital cuts across everything and everything. But broadly as opportunities. And within consumer, it's essentially the days of staples are pretty much over.
Okay.
And it's more about premiumization. Newer categories, newer products. And we can say over the last 3 years, 4 years, consumer as a space has underperformed. But I don't think so. But if you have been in the last segment, in the right segment, like say alcoholic beverages, for example, that's been a standout performer.
Okay.
The luxury segment, standout performer. Companies like say Varun Beverages, Radico Khaitan, which we own.
You also own Varun Beverages?
No, we don't own Varun Beverages. They have essentially been massive wealth creators.
Indians still consume cola and liquor together, right?
I'm told, I don't know, liquor has a bigger impact. So therefore went for that. Nasha, right? The second essentially is the digital part of it. And we've seen what companies like Angel One and Policy Bazaar and Zomato and all of that, and we own a bunch of them, they have done.
You own Zomato, you own Policy Bazaar, and you've been owning Angel for a long time.
And yeah, these are the ones which we've been owning. And then last is the physical economy, where I probably call it the EMI space, which is energy, manufacturing, infra. These are essentially, and if you ask me...
That's the acronym I was looking for, EMI.
EMI. So 10
Energy,
years...
manufacturing and
infrastructure.
Okay.
That's it. These are the three things. And then you could probably add a bit of defense there. Railways, I'm putting it as part of infrastructure. So if you look at that. So that last bucket didn't exist 5 years back.
Okay.
Okay. It has come into prominence in the last 2-3 years. But my view is that this is now going to be a journey over the next 10-20 years. It's pretty much like what happened with services right from 1990 to 2020. It was a 30-year golden period for the entire services sector. Whether you call that as now private banks, you call that as IT services or any other form of services, but the services economy held sway for a very long period of time.
Write the word EMI. Very important. I look forward to these, engaging conversations with Nilesh. EMI. 50% of your portfolio directly, indirectly should be in EMI?
I think so, Nikunj. I think if we're going to see the kind of stuff, because you look at globally, I'm just saying is, and let's, because it's a bit topical, semiconductors, okay? There is somebody who's essentially an IP champion there called NVIDIA. And then there's also somebody who's a manufacturing or a fabrication champion, which is TSMC, okay? Both essentially have been huge wealth creators. So it's not going to be either or. You will have to have your pretty much your focus on both the segments. And that's why I call it, when I say digital, it's essentially going to be your IP creators. It's essentially going to be your design champions and that kind of stuff. People who are focused on innovation, R&D and all of that. And mind you, I mean, today NVIDIA essentially has been a bigger wealth creator than TSMC, and NVIDIA doesn't manufacture. It just is a design creator. It's an IP creator. But both have done well. So I'm just saying is, this is how I would look essentially as Modi 3.0 or essentially India or Bharat from 2024 to maybe 2034 or even beyond.
Okay, so let's put a number here. We currently are a $4 trillion economy. The financial market is about $4.5 trillion. In the journey from $4 to $10 trillion, when it will happen, we don't know. It will happen is what we both know, which is $5 to $6 trillion will get created in the next 3 to 5 years. I'm reasonable here? You agree with me first? Let's understand.
That's right.
You agree with me. Where do you think 50% of this market cap will get created? That is what we need to figure out for our viewers, right?
I still think, Nikunj, it's going to be companies which essentially are going to adopt technology to grow either their consumer business, to grow their financial business, or grow their manufacturing business. I still believe that technology and digitalization are going to be the starting point for every business. Whether we now talk of EMS, whether we talk of semiconductors, whether we talk of anything and anything, it's essentially the big wealth creators will have to essentially be the digital champions, the technology champions. You could be a manufacturing.
Examples.
You could be a manufacturing power. No, I just kind of I refer to the semiconductor piece, for example. I'm just saying is
So what's the direct play in semiconductor in India?
Right now, I don't think there is any direct one. But you never know. I mean, 5 years back, there was probably no EMS company. In 5 years, we have seen how the EMS space has. We will have to essentially keep our eyes and ears open to
So
watch
what should
out
our
for
viewers
that.
do? They say, okay, I like what Nilesh is saying.
No, say for example on the defense side, there is of course, for example, the guys who make the defense products, but then there are guys who are investing in technology to create defense-oriented solutions, to create aerospace-oriented solutions. Okay, I'm saying that can be a very important kind of now.
So BEL is making aircrafts.
Yes.
You're saying buy a company which essentially will be helping in running the aircraft radar, running the aircraft software, running perhaps what really could be a simple safety mechanism.
Yes, or even further. Let's assume we own MapMy India.
Okay.
Okay, that's a deep tech company.
What is deep tech?
Which essentially is where you are clearly pretty much creating a new technology.
Okay.
Okay, which has huge impact or huge implications. Okay, which is something where you are creating technology rather than you're just essentially taking somebody else's technology and trying to kind of put your solution or put your product. Now this company essentially drones is now the big next focus area, and along with drones, a lot of navigation and geospatial technology and all goes into drones, right? Out there, for example, a company like that is trying to kind of create solutions which can go into area of drones, and drones in turn can get into a wide range of applications. You could call that applications for defense, you could call that as applications for agriculture, for navigation and whatnot, for delivery and many other things, for example. A company like that, Nikunj, can have huge potential.
So would you call that as part of a EMI basket, MapMy India?
I would still call that as part of the digital.
Okay. Because what is part of EMI India?
Because they are not going to essentially, I don't think they're going to manufacture anything.
Okay. So let's split the theme again.
So I think, and there will be overlaps. It's not that you can, within even EMI, you never know. But I would still probably classify that as more a digital economy rather than an EMI.
Okay. So let's split the basket for the benefit of our viewers. We know some names. You've been very, generous in sharing your thoughts. So really appreciate that. And again, a disclosure in the middle of the show here that whatever we are discussing, this is just for reference purposes so that our viewers get a better understanding of Nilesh and his firm's thought process, Envision Capital. Nilesh, consumer play, you said you bet on premiumization, you bought into liquor companies, you've been owning Radico Khaitan, you've been owning Sula, and I think you've been owning United Spirits. That's a no-brainer now. You think about it, Indians are moving up the value chain, they'll consume better liquor. And now whether it is with cola or whether it is water, we don't know. But that is how things are moving, right? Okay. Yeah. Second, you are of the view that you should bet on the new technology enablers. So you bought into a MapMy India, you bought into Policy Bazaar, you bought into Zomato. These are pure play because the way you would be shopping and the way you would be consuming products, Angel, would be very online. Now comes the EMI part. How are you laying your bets here?
So I think in EMI, the way we've been doing it is so far we've been owning a bunch of the capital equipment companies.
Okay.
So if I were to kind of really look at within EMI, I mean, if I were to use energy as well as infra, Hitachi Energy has been a position that we have now owned for almost now three
Why
and a half
do you
years.
own Hitachi?
Sorry?
Why do you like it? What is that you like
So
about
I
Hitachi?
think they are probably the only player or probably the most meaningful player as far as the high voltage transmission of power goes. Okay, there is really no company with comparable kind of capabilities and strengths. And Nikunj, the way you're going to see is that you're going to see huge amount of power which is going to get generated. First of all, India is going to need a lot of power, a lot of energy. Okay. Energy security is a strategic imperative and a strategic priority rather than anything else. And if you essentially believe India is becoming a manufacturing place, you're going to need so much of power, so much of energy, and that energy is required to be transmitted or transported in very simplistic terms. And you are going to see a situation where if you're going to have so much of solar, and you're going to have days when so much of solar power will get generated, and you're going to have cloudy days on which very little power will get generated, and you're going to have rainy days when no power will get generated. How do you manage these fluctuations? For that, you need companies with strong capabilities.
So why not buy a power generator? भाई बिजली तो वही बनाएंगे.
हाँ बिजली बनाएंगे, but power generators बहुत होंगे. There'll be many people who can generate power, but not too many people essentially. I mean, when did we know in the last 5 years which has been the new company in transmission technology? I can't think of anybody. 10 years, which has been the company
So
which
Hitachi takes power from a utility and supplies it?
Yeah, so they themselves will not do it. They'll be set it. They'll
They'll
do
set
it for
up the
somebody who's the
transformer.
carrier. So if you are a power grid corporation or you are essentially any other transmission company, you will essentially need a player like Hitachi to supply you the transformers and set it. In addition to that, data centers, etc., are going to need humongous amount of energy, and that's essentially where the potential for a Hitachi Energy comes in. You're again talking about electrification of railways. Okay, you're talking of the bullet train project, and then you have, if this first bullet train, if the experience is good, you probably will see many bullet train projects in the country.
Why not a Siemens? Why not a ABB? Why not a Voltam transformer?
So ABB doesn't cater to that segment. They actually, ABB India or ABB sold off that business to Hitachi Energy. Okay, and that's how Hitachi Energy pretty much came into being.
Should ABB feeling bad now?
No, I don't think so. ABB itself has so much to do. They have so much to do in terms of automation, robotics, all of that. I think each of these companies are champions in their own space. It's just that what is it that you like the most, or what you believe is an opportunity which offers the best of longevity and the best of scalability, and that there is nobody else coming in that segment. And once you have that, then you are pretty much like a champion.
Okay. Nilesh, when the tech revolution started, it's only the big guys who become bigger. 2010, 2020 and 2010 and 2020, the top name is still TCS. The second name is always an interplay between a Wipro or a Infosys, but the pecking order just does not change. When this manufacturing boom will unleash itself, and 10 years from now, 5 years from now, these companies will be significantly bigger. Do you think the pecking orders will still be dominated by ABB, Siemens, L&T? Will the pecking order be that only?
I think so. Over the next 5 to 10 years, I don't see this changing quite significantly, because these are essentially the companies which essentially are going to be the enablers of the EMI space. It's these companies which will be the enablers. So I really don't think they are going to get bigger and bigger. And you're really not seeing new players coming in there. And they have the trust of their customers, because these are such critical equipment that you are not going to compromise on anybody else. And you are essentially going to go for the established players. So it is these kind of companies only which will probably continue to dominate for the foreseeable future.
Nilesh, I just get a sense that there is a lot of excitement, and every time when we are speaking to great stock pickers like yours, everyone's got an idea, and all the ideas are now making sense. There was a time that you would only buy private banks. That was a common idea. But now when I meet some of your peers also, they are telling us, look, it's like a buffet right now, and the problem is that you don't know what to choose. And that is, I think, the biggest, that right now is the biggest confusion right now. The options are so many that you are struggling to really zero it down. How are you zeroing it down? Because transmission makes sense, railways make sense, defense makes sense, digitization makes sense, consumer makes sense, luxury spending makes sense. Even banks are looking attractive right now. AI, neck boom is coming in tech. How does one really zero it down? Because you can buy 10, 15, 20 stocks. And for the first time, the pond sizes become so large that there are 500 stocks to choose from.
So Nikunj, this is a direct outcome of the economy doing very well. When the economy doesn't do well, the so-called defenses do well. Or when rate of interests are high, capital costs are high, the guys who can raise capital the most efficiently are the champions. And therefore, that's why I said that probably the period 2010 to 2020 squarely belonged to either consumer staple companies or to the private banks. These were the two things. The rest of the economy was honestly not doing as well. But more a phenomena over the last 3 to 4 years, we are beginning to see the economy do well. And for the first time, Nikunj, I think we are seeing a situation where we are able to sustain a higher growth rate with moderate inflation. Earlier, Nikunj, when we used to see 7-8% growth, inflation rates used to be 8, 10, 12%. Yeah. Versus that, it's now only 5%. When you have this kind of a scenario, it's both the consumer who's a winner and a producer who's a winner. And that essentially is made our not just growth sustainable, but for people like us as investors, the opportunities are more broad-based. And that EMI segment and the digital segment probably didn't exist 5 years ago. That's a segment which is come into play, and there the choice is so phenomenal.
Apart from
And
Hitachi, do you own anything else in that space?
we've been owning KSB, which we've partly exited. We've been owning TD Power. We've been owning Jash Engineering. So all different plays. I mean, somebody's a play on energy, somebody's a play on the water segment, somebody's is a pump company with essentially opportunities in nuclear power. So we've been playing a whole basket out there, and then on and off we've been owning some of the defense companies as well. So I think we have been essentially having a fair share of the portfolio in that segment. We've been owning some of the autocom companies as well. And so there's so much to pick and choose from, and I agree with you. And so I think what we have at least done is we've tweaked a bit and say instead of owning just a handful of stocks or running a super concentrated portfolio or even a concentrated portfolio, we're running a slightly more diversified portfolio. We no longer are just owning 10 or 15 names, we're probably owning 25, 30, 35 names. Okay, so as to make the most of the emerging opportunities, and that I think purely is outcome of the broad-based economic growth.
What is the tactical part of your portfolio where you are saying that, okay, I will take my ones and twos, those cheeky and sneaky signals, but these are tactical calls, I make my 25-30%, I'm happy with it. What's that?
I think right now, Nikunj, I probably think the large private banks are tactical right now. Because I still think that they're very large plays now, and their ability to grow like kind of north of 20% is surely limited. There is more competition. Other banks have cleaned up the balance sheet or repaired the balance sheet, and they now are capital rich. So they essentially are providing competition, plus of course technology and therefore fintechs, etc. All of that specialized lenders are creating a new wave of competition for them. So I probably think right now it's more like kind of a catch-up trade. They haven't done well for the last 3 years. Maybe the next 1-2 years they might just do well. It's not something on which your expectations are very high. Okay, my definition of tactical would be more like that. But the rest of the portfolio that we have is pretty much like where we at least have a 3 to 5 year perspective on them.
Have you bought anything in last recent IPOs? Any exciting businesses?
IPOs, I don't remember exactly when they would have gone, but I think one of the most recent investments that we are doing and we are still doing is a Fino payment bank. It's again a good combination. Obviously, it's more a digital play.
It is not a bank. It is a payment bank.
It's a payment bank.
What do they do?
So it's the only bank which doesn't lend.
Okay.
Then
why is it called a bank?
So many years ago, just to kind of have financial inclusion, the Reserve Bank of India created a different category of players called payment banks,
okay.
Where they could essentially, as part of financial inclusion, reach out to the last mile at the bottom of the pyramid to essentially get them into the mainstream banking system, where they can go help them open bank accounts, help them transact, help them make bill payments, help them transfer money from the city to the town or to the village. That was essentially the agenda. Fino Payment Bank has essentially kind of over the last 5 years or so has done essentially has built up a very strong customer base and has built up a very strong technology platform. They have now applied for a small finance bank license. If that goes through, that will help them to essentially also undertake lending activities. Okay. But it is going to be more of micro lending or small ticket lending. But with the large customer base and essentially the kind of CASA that they have, it will create a good opportunity for them to increase their engagement with their client segment.
So it's beyond a concept stock. It's like a stock which...
Yes. So I think it's at a very important kind of an inflection point. Let me put it this way.
And if they get into lending, then things change for them.
So it's a business where it's gone through a J-curve, built a solid technology platform, built a good customer base which is growing. And if they get this approval, then obviously they can address even a larger segment with more products and increase the engagement with their clients and become more meaningful and relevant for their clients. So I think if that were happen, it can end up being an interesting play. It's slightly more long term. You will necessarily have to take a kind of a 5-year view, but it can end up being a very interesting kind of an opportunity.
Guys, disclosure again, we've been very stock specific. Stocks
yes.
We've been discussing with Nilesh, they are either he's invested in them or he's buying them, but he's got a bias towards stocks because he owns them at a family level, at a fund level, and perhaps These
Yes,
are
so
your
I-
vested interests there.
Yeah, yes, there is a vested interest in all the names that I am taking.
And if they go up, you'll be very happy. Okay, so
And if they don't, and if they go down, don't blame me.
okay, so you've seen the movie Time Machine.
No, I haven't.
This is a movie in which you can go travel time.
Okay.
So let's travel back and travel forward. 2014, when you look at 2014 to 2024, what is that one thing which has surprised you? Pleasantly surprised you?
I think clearly, I think the capital goods space. That's like kind of pleasantly surprised. Honestly, the kind of wealth capital goods as a space has created is simply mind blowing. May not have been for the first part of the last 10 years, but certainly in the last 5 years, the capital goods space has been quite phenomenal. And that's essentially a kind of, it's also a pleasant surprise. And I think thankfully we've been able to participate in it also.
Has IT disappointed on the same time? Because, AI has happened and look at where Indian companies are. They've just not changed orbits.
So Nikunj, the tier 1 has surely disappointed, but one should not be too disappointed with them because they have grown and they are a services company. So to that extent, I think they have essentially played to their potential. But the tier 2 segment in IT services, I think they have been champions.
Very selectively, but they've
so many
made their
companies
mark.
which have created products which have been focused on niche segments, they have, I think, been phenomenal.
If you like this video, then like, share and subscribe to ET Now.